Hi, my name is Amian Bazode, speaking from Asymmetric Advisors here in Singapore. This is our first video commentary that summarizes our weekly thoughts which we've been publishing for the last 3 years. This week, we really want to focus on 2 points. One is that we're becoming increasingly nervous about the outlook of the stock market, which has been led by technology stocks. And two, why we are turning more negative on technology stocks in particular, looking at some of the major signs that we have seen thus far. Firstly, we feel that the stock market around the world, not just in the US, but also in Japan and Europe, are beginning to factor in a lot of good news regarding the development of vaccine for COVID-19 by the first quarter of next year. This might or might not come, but certainly there's a lot of good news and expectations that it will. Although the market has been very focused on this particular issue, the sectors that have been really leading the market high is technology, and we are somewhat nervous about the concentration of bets in the technology sector, which also been reflected on the same sectors in Japan. So we're somewhat nervous because the fundamentals of technology is starting to deteriorate, which is something that we're really going to go into in the second point of the weekly. But another real factor that is kind of making us nervous is the geopolitical tensions which are being ratcheted up between US and China as we're getting closer and closer to the US presidential elections. We are somewhat disappointed that the trade talks that were supposed to take place on the weekend were postponed, and we think part of that is China's insistence that talks should include concerns about TikTok being banned in the US, as well as WeChat, and potential to extend the US waiver on the Huawei ban to next year, something that is not going to take place, and Mr. Trump has already said that the ban will start coming into effect and the waiver is now coming to an end. Our second point really is concentrated on the semiconductor industry itself, and obviously a sector which is well represented by Japanese companies and Japanese players. Now, we've been fairly bullish on the sector for all of this year and much of last year, and we are now beginning to see real fundamental deterioration in the supply and demand, partly because the data center demand is starting to cool off. That we suspect is partly to do with the pandemic-related panic buying that took place in the last 2 quarters, which has partly led to over-ordering or double ordering, which has created a bit of an oversupply in the memory market, and inventories being so high. So we need some time for that to be digested. The second point, beyond the data center, is the weakness in the smartphone market, particularly in China, where we had expected the smartphone sales to really lead the way. And the recent numbers that have come through in terms of shipments in China in July seem to have been indicating that the market is weakening. So we had seen a double-digit declines both on month-on-month and year-on-year basis, which adds further headwinds. And the last point on semiconductor sector and just the whole supply chain that the Japanese companies are involved in is that the potential ban for WeChat, which if it does encompass WeChat users in China, for Apple that would really be fairly bad news, because it could actually lead to a fairly steep declines in sales of the iPhone if iPhone users are no longer allowed access to WeChat. So we'll have to wait and see how the US kind of clarifies that particular ban. We've also seen as mentioned earlier, that the Huawei ban is coming into effect and the waiver has come to an end. So potentially we might see negative repercussions from that really kicking in. So those are a few factors that we feel are going to kind of become somewhat disappointing in regards to outlook for orders. And we've already seen some signs of that on the bookings so far, but we feel that this could potentially continue for the next quarter, maybe even two. And given the fact that how well the technology stocks have performed this year, we feel that it's time to take some profits and reallocate some of the funds from technology into more bombed out cyclical names.